I'm with John Auers, Executive Vice President of Turner Mason and Company. We've had a couple of good years of demand. How do you see demand developing going forward in the near term?
Well, again, like you said, we've had great years. It's almost been like a second coming of the golden age, but now we're seeing all kinds of headwinds. The trade disputes around the globe, and maybe even a movement towards a cyclical recession. Anytime economic growth slows, product demand growth slows. So we're on the lookout for that. 2019 certainly looks like it's going to be a lower demand growth year than 2018, and 2020 we'll have to see. But that's always a threat to refining prospects. Product demand declines. Or growth, slow in growth even. So it's something we're keeping an eye on. It certainly doesn't look like it's going to be as good as it was the last 3 years.
What about longer term? I mean, if people are thinking about building refineries, how does that factor into their thinking and their decisions?
Well, I think there is this fear of that we're getting close to peak demand. We don't feel we're at peak demand globally for sure, but we might be at peak demand in the Western economies, in the U.S., Western Europe, Japan, and certainly we're probably at peak demand growth. I don't know that we're going to experience demand growth as good as we have over the last 3 years in the future. But that's yet to be seen. We've said that before, and the market has surprised us. Overall, our base case shows that demand growth will slow over the next 10 years, certainly from levels we've seen recently. Maybe 700, 800,000 barrels a day on average over the next 10 years. Maybe a bit higher than that, maybe above 1 million early on and then slowing to those levels. And it does depend certainly on overall world economic growth. We aren't as scared of EV penetration or stealing market share from gasoline as many others. We think the EV craze is sort of gone a little too far. We've even seen some numbers in the last couple of months where EV growth has actually slowed to zero for July and August, partially due to some reduced subsidies in China. What China does with EVs is going to be a big part of how EVs grow. But again, overall, we think that that's further down the road, and that gasoline demand, diesel demand on a worldwide basis will continue to grow for at least 10 to 15 years.
All right. And then one final question, which is how do you see IMO impacting markets in 2020?
Well, IMO will certainly be a major impact. It's probably the single biggest product specification event that we've seen. We've seen lower gasoline and diesel sulfur regulations being implemented on a country by country or region by region basis. This is the first time we've seen a major fuel specification done on a global basis, and it's being done on a product that's extremely hard to desulfurize. So it's going to be a major event, but there are a couple other market events that might mitigate the actions. Two of the things that we were expecting to see from IMO would be increase in diesel prices as more distillate needs to be put into the bunker market to displace high sulfur fuel oil, and also widening of crude differentials between high sulfur heavy crudes and low sulfur light crudes. A couple market developments. One, we mentioned the slowing of economic growth, which might slow diesel demand growth in the short term, but also a de-dieselization in Europe, where people are moving away from buying diesel vehicles. That's diesel vehicle penetration in new car sales has moved from above 50% just 3 years ago to 30% this year. So that's going to have an impact on diesel demand, free up more diesel for the bunker market. So that should mitigate that diesel margin impact, even though we still see growth in diesel margins because of IMO. And then the shortage of heavy sour crude because of the loss of Venezuelan production and the stagnation of production from other Latin American countries, that will tend to blunt the widening of the heavy light crude spreads, and that extra heavy sour resid that's going to be on the market no longer can go into the compliant bunker market. That will be a nice replacement for this loss of Latin American crude, high sulfur crude. So those two events kind of work to maybe smooth out the market, at least to some extent.
Okay. Great.
Okay, thank you.
Thank you.